So this is pretty crazy. The Fed, the Federal Reserve, managed to pull off one of the greatest cons I've ever seen happen in the financial markets. However, even though their intentions were pure, I think the end result is going to be far different. In fact, almost opposite of what they expect. Now, I stipulate that this sentence may sound a little bit crazy, so allow me to explain what I mean. Essentially, in any time of crisis, markets suffer from a shortage of liquidity. When I say liquidity, I just mean money. It's just a fancy word to make me sound smarter. Essentially, what's going on when we're faced in times of trouble, people and businesses and banks are hanging on to their cash. They're not buying anything, they're not spending, and of course, they're not lending. It's just how it works in times of crisis. And that's a known phenomena. It happened in pretty much every crisis that all of us have seen or read about to date. However, what we're faced with right now is a goddamn cataclysmic event of epic proportions which nobody has ever seen or heard about before in the history of mankind. Not even 1929 caused an epic shutdown of the entire goddamn global economy. We have 70% of the world's airplanes parked in the goddamn desert for weeks, maybe months. This is epic shit. There's literally no money circulating in the economy. And that causes a horrible chain reaction. What happens is, since I'm not getting paid, I can't go to the grocery store, can't buy groceries. The grocery store cannot pay its supplier. So, one of the ways to handle that artificially is to actually throw money at the market, essentially throwing fuel on the fire to keep it alive, which is what the US government has been doing with these stimulus checks. That's actually not a bad idea. And what the Fed is up to right now is a hell of a lot different than giving out stimulus checks. The Fed just announced a couple weeks ago that they'll be establishing a special purpose vehicle, which is just a fancy name for a subsidiary company, which will buy bonds from the market, from the capital market. Now, you may ask yourself, what the fuck is a bond? Well, it's very simple. A bond is essentially, if I have a company, I can sell you a piece of paper that says, if you give me $100 today, when the date that is specified on that piece of paper comes, I'm going to give you $110. Essentially, it's a loan. But it's traded on the stock exchanges, people buy that, and here's the interesting part. The bigger the risk is, based on how well the company or how bad the company is doing, the more or less discount I get on the price. So, for example, if this piece of paper is worth $110 at the day that I basically issue that, if my company is in trouble, you may be only willing to pay $60 for that because of the risk that's built into these bonds. The pricing reflects the risk. And there's different credit agencies and ratings that basically rate these bonds. And the absolute worst rating a bond can have is what you call junk bonds. This is pretty much means that the company is in dip shit. And your chances of seeing your money, if you buy that bond, are not very high. It is what it is. Now, the Fed just came out a couple weeks ago and said, we're going to buy junk bonds. Yes, specifically junk bonds to help those companies with the most difficulties to get funding, because nobody's going to give these companies any type of loans. Banks are not going to touch them. People aren't going to buy their bonds and get them some money. I mean, nobody's investing in these companies. They're pretty much doomed. So the Fed is like, okay, we're going to rescue you guys by buying these bonds which nobody wants. And that is a noble cause. I get where they're coming from, but it poses a lot of issues. This was weeks ago, and nothing has been actually done beyond just them making the announcement. That is why I call it a con, because what followed after their announcement is a very known psychological effect of people actually going and buying these bonds because they're expecting the Fed to go and do the same. So the market actually got influxed with a lot of cash of a lot of people buying these bonds as part of a reaction to the Fed's announcement. The real question is, why do I think it's a bad thing? I mean, people will be, keeping their jobs. There's going to be a lot of money in the market. I mean, it's a good thing, right? Well, not exactly. So let me explain that by using a simple story. Imagine that you are a parent and you have two kids, Johnny and Jimmy. Johnny is a smart student, straight A's, saves his money. Jimmy is a piece of shit. I mean, Jimmy is an idiot. Jimmy is spending all his money on cigarettes and hookers. I'm joking. I don't know. I'm assuming Jimmy is over 18 or 21 or whatever he needs to be. So essentially, you have two kids here wanting to buy a PS4 or whatever, some video game. And one of them has the money because he's been saving. The other one doesn't have the money because he was a doofus. So you can either let that dude suffer and not get his game and learn the hard way the importance of handling your money in the right way and also sending a good message to your other kid. Or you can just say, hey, Jimmy, you piece of shit. Here's $50 or 100 or 200 or 400, whatever. Go get yourself a new PS4. I don't want to see you bummed out. If you take the second option and you give Jimmy these $400 to buy a new PS4, think about the message you're sending to both kids. To the idiot kid, pretty much he knows that he can do whatever the fuck he wants. You're still going to give him more money. So Johnny, the smart kid, is going to be like, hey, this dude is a clown. I've been behaving, saving my money, I've been good, and yet he just got an extra $400. What kind of message are you sending to Johnny? Well, the example is a little bit, childish, but the markets behave similarly. By doing that, by buying junk bonds, you're essentially interfering with the natural selection of the market. You're rewarding bad company managers by bailing them out of failure, even though they failed. Because think about it this way. Markets are very much like nature. It's like a jungle. Survival of the fittest. The strong get stronger, the weak die off. And that way you get a better and stronger market every cycle. Essentially, by giving money to the failed companies, you're preventing a very important element that has to happen in every crisis that makes you even better for the next time. What happens is in every crisis, the companies that were on the verge of getting shut down, the crisis essentially accelerates their collapse. It just accelerates the inevitable. But the good companies get rewarded because their competition is now trimmed. All of these companies who were inefficiently competing with them are now gone because their pricing was too low or whatever. So now the competition is gone and I'm, as a strong one, get rewarded for being smart, for saving my money, for not taking overly great risks. Essentially, in a time of crisis, the good companies get rewarded and the bad companies get punished. But if you bail out the bad companies, you prevent that from happening. And by doing that, you're interfering with the forces of market, naturally selecting out the bad companies and keeping the good companies. Let me show you a quick table. What happened in every crisis since 1940 to 2020? Check this out. After every crisis, you see the green dot here and the red dot here. By the way, this table is from moneyinmarkets.com. You guys can go and check it out. After every crisis, we have an upwards movement. Then we have a crisis, upwards movement, crisis, upwards movement. Every time there is a crisis, the market corrects itself. So as you can see from this table, every time the market experiences a crisis, it comes out stronger from the other side. Of course, if you look at it at a 5 or 6 or 10-year spreads, that's what you're going to see. Now, the Fed has been dealing with this criticism by saying we're only giving money to fallen angels, which means that this money is only going to go to junk bonds who became junk bonds because of the coronavirus. We're only going to give money to you if you used to be good, but the crisis made you a junk bond. Essentially, we're going to help you out. But here's the whole problem with this whole fallen angels theory. If you were on the brink of becoming a junk bond before the coronavirus, and this virus actually pushed you over that cliff, that means you didn't have a great business to begin with, which means that this whole theory doesn't really add up. So actually, you're giving money to shit companies by definition, even if you just call them fallen angels. I think the title in itself is a little bit misleading. I mean, they were not angels before. They were like shit companies. So what's the end story here? So essentially right now, the government, essentially if the Fed actually follows through, introduces a new buyer to the bond market. One that is completely insensitive of price, which means that you get zero rewards for being efficient, for being profitable, for being a good manager. Basically, for being Jimmy or Johnny, whatever the fuck their name was. Let me give you a living and breathing example. Me. I come from Russia. Russia from 1917 to 1990 systematically did what the Fed is doing right now. Put more money into failing industries just so people will have jobs and companies wouldn't shut down because they didn't want unemployment. Unemployment is bad, so we're going to keep bad businesses alive. Essentially, what that caused over the course of a few tens of years is the complete collapse of a government, of a country, of a society. Because when this process keeps happening, it gets compounded. Inefficient players get rewarded, efficient players get disincentivized, and this slowly leads to a complete collapse of not only your financial markets, of the entire society. If you interfere with the market right now and you don't let the market forces weed out the weak companies and reward the strong companies, America may not come out of this crisis in the same manner it did from the previous ones. And that is a scary thought. Now let me know what you guys think below. If you haven't yet, it might be a good time to subscribe to this channel and help me out. Of course, you can hit the like button, you can hit the bell, every little thing helps. And if you're an OG and you want a medal, share this video, then I'm going to come to your house and sing you a serenade. I'll see you guys in the next video.